Patrick Deverne, MD, Head of the Foggy Institutional Business at Arno, and you're watching Taking Stock.
Two minutes to go into the close down here on the trading floor of the New York Stock Exchange. We are expected to see the major market indexes finish the tail of the tape today on this Thursday, February 5th. Right about at session lows. You look across the major indexes, the Russell 2000, the only one that had been in positive territory in the morning, but the closing auction bringing with it a fair bit of profit taking and selling into the close. We are seeing a little bit of risk off rotation once again, a little bit of an Anthropic hangover maybe for some big software and AI-led names here for a third consecutive day, though we do see a bit of outperformance from staples, utilities, as well as real estate stocks. Once again, a lot like yesterday's tape into the close, with losses to the downside in the S&P 500 led by our typical risk-on leading candidates like materials, discretionary, as well as technology shares, which for the most part are getting clobbered once again for a third consecutive tail of the tape. Welcome to the broadcast, one and all, on this very eventful day here on the New York Stock Exchange. As you can tell, you're watching Taking Stock. I'm your host, JD Durkin, mere moments away from the ringing of the iconic closing bell down here at the New York Stock Exchange. At this hour, with about a minute or so left in the trading day, we are seeing the Magnificent Seven tech stocks mostly lower on the day. Microsoft shares down 5%, and we will hear the quarterly results from the team at Amazon coming up in the next few minutes. Shares down about 4.5% on the day. We got the Junior League of the City of New York here now to ring the closing bell. We'll pick up our coverage right after this. The three strikes of the gavel, we officially bring about a close to the trading day down here on Wall Street on this Thursday, February 5th. The S&P 500 down 1.2%. The Dow 30 components also down more than 1%. The New York Stock Exchange Composite Index down 1%, and the small caps, the hardest hit of these majors, down about 1.8. We will bring in Ted Thatcher in just a moment. I do want to quickly highlight we did see volatility with the VIX spiking up to a 23 handle in the session earlier today. Its highest level we've seen volatility reach going back to November 24th. Yields down across the board, maybe a bit of rotation there into fixed income. The dollar has now risen 5 out of the last 7 trading sessions. Oil benchmarks taking a little bit of a modest breather on the day. Comparable story for West Texas Intermediate as well as Brent crude. But the crypto majors once again throttled. We are trying to see if Bitcoin can stabilize, find its footing right around 63,000. It is now trading to its lowest level, going all the way back, and I do mean all the way, to Monday, October 14th, 2024. That's a few weeks before the last big election day. Fintech stocks under pressure. Robinhood shares down 9%. Software stocks down as well. AMD, Palantir, Datadog, you name it. It is probably down and to the right on this risk-off Thursday. Let's bring in our good pal Ted Thatcher. He is joining us remote. Ted is the president of Bright Lake Wealth Management. Ted, welcome to the show. Great to have you here. Kick off the broadcast for Taking Stock on this wild Thursday. What is your take on what we've seen across the tape here the last few days? We're really seeing that rotation away from tech and discretionary. What do you see, Ted?
You know, JD, really, you're right. I mean, exciting, concerning, a lot of negative pressure on the markets right now. The market is just looking anywhere for some stability, to find some footing, and it's just not getting it. I mean, when we think about the news headlines of about a week and a half ago, it was Fed rates. This last Friday, it was the metals selling off. And of course, the story about software continuing to sell down on valuations continues. All of this despite a lot of, I would say, normal, solid economic data. So while the data points might be there for a reasonably stable discussion, the headlines just aren't leading us there. The markets, you mentioned the VIX, the volatility is here. And I think that is the story that I see in the markets right now. A lot of uncertainty, and expectations that haven't found their footing yet.
Ted, you mentioned all things considered, maybe better than to be feared economic data. How about the slate of earnings? Because here we are, fresh off of Alphabet yesterday. By all things considered, they crushed it on earnings. They are more than expected to double their AI spend from 2025 to 2026. Yet we saw downward pressure on the stock. We await the team from Amazon the next little bit. What have you made of earnings season that hasn't really translated into a lot of bullish optimism for investors?
Not yet. I will say personally, I am actually quite bullish on Google. I do think that the fundamental earnings positivity that we see is sort of one of the stabilizing factors in that Mag 7 category. But the reason I'm bullish on Google specifically is just because of the AI story there. So much of the AI story has been driven on how performant models have been. But this year, there's more of that discussion of whether they're going to turn the profit. But before we get so focused just on profits for the Mag 7 and the mega cap AI investors, I think we have to say who is in a position to be able to win specifically with distribution. And to your point about Google's good earnings, I think they're in a perfect position to take advantage of the incredible distribution they have with over 230 million paid subscribers to Google One services, which of course they're going to put Gemini right in front of all of them.
Yeah, Ted, I don't know if you're prepared to talk about Amazon. Totally okay if not. Don't mean to put you on the spot, but quickly, if you can, Amazon was the big underperformer in 2025, at least for the Magnificent Seven tech stocks. What's on your radar to give you some sense of what you'll be paying attention to as they report in the next few minutes?
It's a great question. And really, when I'm looking at with Amazon is twofold. I actually am really bullish on Amazon in 2026, and I'll explain why. You know, so much of Amazon's growth has actually come from, of course, the AWS web services side. But in Amazon specifically, when it comes to AI and when it comes to jobs, I think they're one of the first companies that might actually reach that singularity where they actually have more robotic employees than physical humans. You know, about 1.5 million people work at Amazon now. I think the amount of robotics they have is north of $1.1 million today. And so there's two sides of this that I'm seeing. Of course, we all love to talk about the AI story on the software side, but Amazon specifically, I think, is able to translate the performance and growth in AI on the robotics and turn that into ROI too. I'm not sure if we'll see it yet in their earnings, but I do expect that to be a driver of growth for them in 2026.
All right, that's Ted Thatcher. He is the president of Bright Lake Wealth Management. Ted, next time we do this, come visit us down here at the big board. It's great to have you kicking off the show. We'll talk with you again soon. I'm going to get you quickly caught up on the latest from Peloton earnings. The stock got throttled down another 30% today. Peloton missing on top and bottom for the weaker than expected holiday quarter. After years of declining membership and lower revenue, CFO Liz Coddington is set to leave the company. Peloton, of course, the ultimate COVID-19 pandemic era darling, but is down 97% off its January 2021 highs. Peloton shares down already about 40% here in the first few weeks of 2026. Before we toss a break, Howard, how about a couple NYSE notables? We'll start with Hershey. I tried to pick some stocks that had a pretty good day because there weren't a whole lot out there to choose from the tape. Hershey stock up after a big beat on top and bottom, reporting 171 a share versus expectations of 140. Closed on the acquisition of Lesser Evil Snack Foods to broaden the company's salty snacks portfolio. Now I'm hungry. Shares up already 22% here on the year. And how about Aflac having an outperforming day, up 3.3%, an all-time high despite a miss on earnings. Revenue fell year over year, but earnings per share did rise. The downside to lower net investment offset by higher sales in its U.S. unit. Shares of AFL up already 7% here in 2026. All right, FinTech TV lead anchor Remy Blair sat down with Ondo Finance's Armin Khatri at Ondo Summit 2026 just a few days ago, right here in New York City. Take a look.
Joining me here at Ondo Summit in New York City is Armin Khatri, head of ecosystem at Ondo Finance. Armin, great to have you here. Thank you so much for joining me.
Thank you, Remy. Thank you, FinTech TV.
Well, 2026 is off to quite the start. So compared to last year's Ondo Summit, what do you think is different this year?
It's incredible. Last year, we had the dream of launching global markets, our tokenized stocks and ETFs. We had put blog posts out. We were probably the first to plant a flag in the ground and say, this is something that's coming. It's going to be the next wave of liquidity and RWAs that go on chain. But we didn't have the product ready yet, right? Fast forward a year later, the product is ready. We're live on Ethereum mainnet, BNB, Solana. We've seen how these products get adopted by various ecosystems. We've seen the access that they provided to users who've never had the access to these assets before. And I feel like we're really making waves when it comes to improving the quality and selection of assets that are available on blockchain rails.
So speaking of which, given that we're just starting off 2026, and I'm sure there are a lot of announcements on the horizon, what do you think innovation in this space looks like as we head into the year?
In your intro, you mentioned Ondo Perps. I think that is going to be quite the innovation because we've seen Perps protocols do really well with crypto native assets. But when they try to do RWA Perps, they sort of fall flat. Perps are still something that I feel like a mass retail audience is familiar with, but maybe doesn't fully understand the benefits of because they're just so inextricably linked to crypto assets. As they're becoming a little bit more known to be linked with RWAs, I think we could really see the full benefit once the liquidity is there. And as retail users trade these and as market makers make these markets, they could fully hedge everything on chain. So we're going to see much deeper markets and a much better trading experience for RWA perps that just hasn't existed. So if a user wants to express a 20x long position in a FANG stock, for instance, there's not going to be a better way to do that except for on chain. And
So Armand, walk us through this because you gave us that one example. And if we're thinking about markets outside of the US, there are a lot of expectations when it comes to RWAs. And even here in the US, we think about the major exchanges, the US exchanges getting in on the tokenized asset action. So tell us about the benefits.
Yeah, I mean, the benefits are numerous. I think what we're seeing is this idea of what stable coins have done for the US dollar. So it starts with that access. We really feel like we could do for securities. So accessibility is a big thing. A lot of people say, well, if I want to open up a brokerage account, I have so many options here in the United States. And that's true. It is as easy as it can be, but that is not the case globally. And even if it is the case globally, some of these brokerages are still not even optimized for a mobile experience. Meanwhile, we have crypto rails that have fully transformed how we interact with our devices and having the ability to purchase assets that are of the quality of, S&P 500 grade right on your mobile device is an innovation in and of itself, but it doesn't really end there. I think that when it comes to how other tokenized stocks and ETFs have existed in the past, we've seen liquidity models that really too much geared towards what an on-chain native model would be, having pools of offerings, not necessarily having the depth to support size in orders. And we've reversed that. We said, okay, accessibility is paramount, but liquidity is also key. If a user wanted to come in and place $1 million trades, they can do that without slippage causing all these fees that shouldn't exist and that don't exist in TradFi. So we have the same depth of liquidity of TradFi markets on chain, which means that anyone could express how they would want to trade on chain in a way that just hasn't existed prior.
Well, Armand, it was great talking to you here at the Ondo Summit. Thank you so much for joining me, and thank you so much for sharing all of your insights.
Thank you, Remy.
Thank you.
Let's do it, folks. Welcome back to the broadcast. You are watching Taking Stock. Time now at this hour for the latest fintech, crypto, and AI headlines for your Thursday afternoon trade. First up, the crypto majors getting rocked on the day. Bitcoin, ETH, both down about 12%. Solana down 12% as well. Bitcoin trying to find its footing right around 64,157. Next up at this hour, the CFTC backing away from a Biden-era proposal that would have banned sports and politics bets on prediction markets. Chair Michael Selig signaling new rules are coming soon instead. And finally, traditional finance leaning further on chain, with CME Group saying a tokenized cash coin built with Google Cloud could roll out here in 2026. This comes as regulators open the door to crypto and stable coins as derivatives collateral. Please welcome to the show now a very, and I do mean very, special guest, the great Bill Barton, CEO of Bob's Furniture. What a day, IPO day here at the big board. Congratulations, great to have you.
It's great being here, JD. Thanks for having me.
Thanks for the digs here. We're ready to rock and roll.
You look
These
great
have
in
been
there.
all over the trading floor today. Thanks a lot for joining us. First and foremost, what does this mean for you personally this day, for such a great legacy brand to be down here at the New York
To
Stock
take
Exchange?
a company that's been around 35 years and a team that's been working for so long, you're really helping people furnish their homes with great stylish furniture, everyday low prices. never taken their eye off that ball, but finding ourselves in a place where we were ready to become a public company. It's a big day for everyone on the Bob's team.
Bill, how closely do you have to kind of match the general macroeconomic conditions when you and your team make a decision like this? We've seen a lot of activity in the IPO market. We're still on a broader backdrop of consumer uncertainty.
Yeah, absolutely. But look, in our case, we thrive in all economic conditions. And we've been around 35 years. We've seen how our business performs in down cycles and up cycles. And being an everyday low price leader, you know, our sales are much more consistent over the years. So we're a little less impacted by macro. The other thing is, a lot of furniture is bought at life milestones, like the young person starting their first apartment or the young couple setting up their home. That still happens regardless of macro. But even in those times, we like to say value is always in vogue. So the Bob's way wins in all conditions. So here we are today, having our IPO.
Are there correlations between headwinds and pressure points on the broader housing market, and therefore the availability maybe of a lot of those would-be consumers to say now is the time to make that ultimate furniture purchase?
Well, we're not correlated directly with housing, but we would certainly benefit if there was a tailwind. But over the last 3 years, you know, furniture's kind of been in a slump, but we've been growing and taking market share. We've been staying on track with 10% new units every year. So people are still buying furniture, but if the housing market turns around, it would be a tailwind. It'd be very helpful to us.
You know, one of the stories I've been tracking closely the last year, this idea of value shopping, right? We hear
Yes.
from companies like Walmart, they say we are seeing more higher income, six-figure Americans. They're shopping for their essentials at Walmart more than the company's ever seen before. And I wonder if Bob stands to benefit from something comparably. Are you seeing higher income Americans say, hey, I've got lots of furniture options, but Bob's is the brand I'm gravitating
We
towards?
absolutely are, JD. In fact, that's the one cohort that's been growing the fastest for us. Wow. So 27% of our consumers have household income over 150,000, and that's up 3% in the last 2 years. It's the fastest growing cohort. In fact, we say there's a trade-in effect going on at Bob's. They're finding us, they're loving what they find. But we sell, of course, to all income demos. But that is the fastest growing demographic for us, is the affluent households.
Yeah, that's a fascinating storyline to continue to track, and thank you for that. If I'm not mistaken, right now you're in 26 states.
Yes.
I went through your S1 filing. You hope to grow to about 500 stores by the year 2035.
Yes.
To some degree, show us what that roadmap looks like for growth.
Absolutely. Well, today we're in 5 regions across the country. Our original 2 here in New York and New England. We grew into the Midwest and actually all the way out to California in 2018. In fact, little tidbit for you, the state that has the most Bob's stores is California. So we've demonstrated portability of our model across the country. Now, of the 300 stores that we're going to be opening in the next 10 years, about 100 will be in infill in those markets. So we're still opening new stores here. We opened one on Long Island City just recently. About 100 will be in the Southeast. We've already opened in North Carolina this year. We're moving south, so 100 stores will come from there. The last 100 stores will be in the Texas, Rocky Mountain, Pacific Northwest. So about a third across those regions.
All right, I live very close to Long Island City in Western Queens. I'll make sure I pay the new location a visit. Bill Barton, CEO of Bob's Furniture, congratulations on a great day down here at the New York Stock Exchange, and thanks for being on the show.
Thanks for seeing me, JD.
Don't go anywhere, much more Taking Stock coming up from the big board right after this. All right, let's do it, folks. Welcome back to the broadcast. Time now for the headlines you need to know on your Thursday afternoon in the world of startups, raises, as well as rounds. First up at this hour, AI voice startup 11 Labs more than tripling its valuation to $11 billion in a $500 million funding round led by Sequoia Capital. Next up, AI chip startup Cerebras Systems raising about $1 billion at a fresh valuation of $23 billion, stepping up the arms race with NVIDIA as investors keep pouring money into AI infrastructure. And finally, staying with the AI chip race, Reno, Nevada-based Positron raising about $230 million with backing from ARM and Qatar, targeting energy-efficient interference as data centers look beyond pure NVIDIA builds. Time now for what is always one of my favorite parts of the show, not just speaking with an amazing guest, but a guest who just rang the iconic closing bell. Jerry Powell joins us now. She is the president of the New York Junior League. Thanks for being here and congrats on the bell.
Thank you so much.
Can I get your experience? What was it like for you and the team to be down here, bringing about a close to the markets today?
It was such an incredible experience. I mean, for the members of the New York Junior League, we're such a New York institution. We've been around for 125 years. This is our celebration year for 125 years. And so to have that opportunity to do something as iconic as ring the New York Stock Exchange bell was just so tremendous. It's
Jerry,
a special moment.
We might have a few viewers a bit unfamiliar
Yes.
with the work that you do. So tell us what the Junior League is all about and some of your priorities here for 2026.
Yes, so we are a women-driven volunteer organization. We have 2,800 women volunteers who are trained to work in the community. We have 60 plus community partners that we work with, and we work across areas from adult education and mentoring to child education and mentoring to City Impact, which is our program that works with our parks and helping to revitalize spaces from other community partners that are doing great work in the community. So we just do a robust amount of community impact work in the city, supporting women, children, and families.
That's amazing. Congratulations on all that. I wonder in what ways have the core values stood the test of time, how they stayed the same 125 years later, and in what ways does the league continue to evolve and maybe look a little bit different given the new needs of the moment?
That's something, what's so brilliant about the New York Junior League model is that when Mary Harriman, who was our founder, who was a Barnard student at the time, 19 years old, founded the organization in 1901, she really hit upon the idea that we needed to have an organization that could be responsive to what was happening on the ground in the moment. So in her time, she was inspired by the Settlement House movement. But the great thing about it is that as the issues on the ground have changed and evolved, our model is able to move and evolve and grow with it. So over the years, we've had projects that have been responsive to health crises in the city. Right now, we're very, very focused on food insecurity, and that's because we are in constant dialogue with our community partners to understand what are the needs of the community, how can we step in, how can we help, and that is why we're going to be able to be in New York doing what we do in the community for another 125 years.
Yeah, making sure you're really addressing those much needed needs head on. How about the Winter Ball, February 28th, I believe? What should people know if they're a bit unfamiliar?
Well, the Winter Ball is our largest fundraising gala, where it'll be on February 28th. We are thrilled that we've had so much overwhelming support that we are almost sold out of our tickets. So we do have a few tickets remaining, and it would be wonderful if we can sell out today, because all of those funds goes to our community impact work. We really rely on our fundraising activity to help fuel the work that we're doing in the community.
That's awesome. Jerry Powell, congratulations on all the success for you, the organization, 125
Yes.
years young, the president of the New York Junior League. Thanks a lot for joining us.
Thank you so much for having us. Thank you.
Come back on the show anytime. Don't go anywhere.
Absolutely.
Much more Taking Stock coming up after this very quick break.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money, where we get underneath that hood of those big headlines that you see, and we actually talk about how these companies are making that money. Today, we're going to be breaking down the fintech known as Alloy, which is the orchestration platform that turns KYC into conversion and compliance into Advantage. So they've got a lot going on. Onboarding isn't one static check, it's a dynamic orchestra. Alloy is a control tower that routes identity checks across multiple providers, including companies like Socure. It applies the configurable decision rules, and then it manages the ongoing monitoring. So approvals go up, fraud goes down, and the audits stay clean. The proposition is simple. Orchestrate smarter, then convert better. Alloy's revenue model is built on a few things. First of all, platform subscriptions for orchestration, case management, rules, and dashboards. Number 2, usage fees per check and per case volumes across KYC, KYB, AML, and lifecycle monitoring. Number 3, premium connectors and automation that shrink manual review and boost straight-through approvals. Number 4, expansion models into credit underwriting and embedded finance controls for sponsor banks. Parent-child guardrails that scale compliant onboarding across portfolios. So let's talk a little bit more about Alloy. Alloy says it's trusted by 700 plus financial institutions and fintechs globally. The embedded finance controls give sponsor banks auditable oversight while letting fintech partners optimize their own flows. Paired with companies like Socure, many institutions report material fraud reduction and manual review compression, with conversion lifts to match, which would make sense, wouldn't it? Alloy makes compliance feel invisible and conversion impossible to miss. When identity flows are orchestrated well, onboarding becomes a revenue engine, not a roadblock. Can you imagine that? Usually the onboarding is the hardest part. So that's how Alloy actually makes money. Is there a fintech company you want us to break down, see the revenue model, see that P&L in full glory? Put it in the comments below and maybe we'll feature you. Back over to you.
To be honest. All right, let's do it. Welcome back to the show. Before we bring you the latest you need to know in Amazon earnings, a very special birthday shout out to our one and only director, the great Eileen Shields. This show is, a crowd goes wild for our director. Happy birthday. This is impossible without the amazing work of so many incredible people. You don't get to see day to day. Any bit of success I have is only because of them. So grateful for Eileen. Hope you have an incredible birthday. Now to the latest for Amazon. You need to know we do have the stock pushing down almost 10% after hours. They did have a beat on revenue, reporting $213 billion for the quarter versus the street's expectations at $211, but actually a slight miss on earnings a share, reporting $195 versus the street's expectation of $197. They did see a beat on revenue for both advertising as well as for Amazon Web Services, and projected CapEx spend to hit $200 billion this year for 2026, which is a fair bit more than analysts have been expected. That'll do it for today's edition of Taking Stock. Have a great night. We'll see you again tomorrow.